How to invest in ETF, the ultimate guide that millionaires don't want you to see. Ever wondered how millionaires keep the investment secret? In this video, I am unveiled the ultimate guide to invest in ETF that millionaires don't want you to see. Whether you are a teenager or just starting in real life, understand ETF can transform your financial future. Today, I will explain everything about ETF in detail together with some strategy you can use to get started. I have been investing for over a decade now, continuing studying and testing different methods. Stay tuned until the end. I'll tell you the best ETF in different industries. What is an ETF? To start with, let's clarify what an ETF is. An ETF or exchange trade fund is an investment vehicle that trades on the stock market and hold a collection of assets. This could include stock, bond, commodities, or a mix of those. Think of an ETF like a basket where multiple investments are held together. Unlike purchasing a single stock like Apple, which represents ownership in just one company, an ETF allows you to invest in a wide variety of assets within one fund. Breaking down the term exchange traded fund help to understand its nature. Exchange traded indicate that those funds are bought and sold on the stock market, similar to individual stock. Fund refer to the collection of various investments within the ETF. Unlike individual stock or bond, ETFs, mutual funds, and index funds are types of investment fund that include a diversified set of assets trading as a single unit on the stock market exchange. Do you need a bookage account? If you are looking to invest in ETF, you will need a bookage account. For instance, I use Fidelity Investment for my account, but there are numerous options such as Vanguard, Charles Schwab, E-Trade, and M1 Finance. Choosing the right type of account within the broker is crucial. For general investing goals like saving for future purchase or just growing your wealth, a standard individual investment account is suitable. However, if your goal is to build retirement savings, you should consider opening a retirement account like a Roth IRA, 401k, SEP IRA, or traditional IRA. There is plenty of information available on those account types, and if you want to know those as well, leave a comment below and I will cover them in detail for the next video. But let's stay focused on ETF for now. What ETF should I buy? With over 2,700 ETFs available on the stock market, the selection can be overwhelming. To narrow it down, you need to align your ETF choices with your investment goal. Are you saving for retirement and seeking aggressive growth with some dividends? Or are you nearing retirement and looking for less aggressive options, possibly include bond ETFs? Your investment goal will guide your ETF selection. Later in this video, I'll share my top ETF picks, but first, let's explore how to find suitable ETFs. One of the best resources is the ETF Database, a powerful and free tool. The ETF Database allows you to search and sort through ETF by various categories such as asset, class, sector, industry, region, and country. For instance, if you are interested in ETF with high dividend yields, you can filter your search accordingly. Clicking on the dividends column, you can sort the ETFs by the annual dividend yield, making it easy to identify those with the highest return. Suppose you are in your 50s and looking to adopt a less aggressive investment strategy by adding bonds to your portfolio. The ETF Database can help you find top bond ETF like AGG and BND. Conversely, if you are younger and aim for aggressive growth, you can explore aggressive growth ETFs such as QQQ, BUG, and IWF, which are some of the best options for growth investment. This tool is incredibly valuable, offering the ability to tailor your ETF search to specific sector or theme like blockchain, gaming, or semiconductor. Regardless of your interest, the ETF Database can help you find the best ETF to align with your investment strategy. ETF Profiles. After selecting a few ETFs from etfdb.com, it's essential to delve deeper into those specific questions like which stocks of the ETF hold its annual return and dividend payout are critical. Let me show you how to find those answers efficiently. What you see here is an ETF profile. When we search an ETF, you will notice that all of them have profiles similar to this. Suppose you find an ETF you like and want to invest in, you should first look up its profile for further analysis. Simply go to Google, type the ETF name, for example type VOO ETF, and the first non-ad link will usually be the ETF profile. Clicking the links brings you to the ETF profile. It's crucial to understand some basic terminologies on those pages. Not all information is vital, so let's quickly go through this. For example, this profile is for a Vanguard ETF, but all ETF providers like iShares, Invesco, or SPDR ETFs by State Street have similar profiles. The content may look different, but the information is generally the same. The first section I always check is the summary, which tells you everything you need to know about the ETF. For instance, if an ETF invested in S&P 500 stock, it gives you exposure to 500 of the largest USA companies. It also aims to track the index returns, offering a guide of the overall US stock market returns. This indicates that investing in this ETF essentially means investing in the entire US stock market. The summary also highlights the ETF potential for investment growth, noting that its share value can fluctuate more than bond holding funds. Its emphasis that the ETF is suitable for long-term growth, making it clear that short-term investors might want to look elsewhere. This section provides a concise overview of the ETF alignment with your investment goal. Next, I look at the expense ratio, which is the cost of owning the ETF. For example, VOO has an expense ratio of 0.03%, meaning you will only pay 30 cents per year for every $1,000 invested. It's crucial to always consider the expense ratio, as high fee can eat into your profit over time. For instance, in my Roth IRA, I invest in QQQM, a lower cost alternative to QQQ, both offered by Invesco. The ETF performance is another vital section. By clicking on the price and performance tab, I can see long-term performance metric. Short-term data like the 52 weeks high and low or net asset value is less relevant for long-term investors. Instead, I focus on the average return since the ETF inception or over a 10 years period. For example, VOO has had an average annual return in 16.17% since its inception in 2010. This long-term data helps in making informed investment decisions. Fund overlap. Now that you can analyze an ETF profile, let's talk about fund overlap. Fund overlap occurs when multiple ETF in your portfolio invest in the same stock or sectors. This can either diversification, which is a strategy to spread investment across various assets to minimize risk. If you invest in both VOO and VTI, you will find that 99.4% of VOO stock are also in VTI, leading to significant overlap. This reduces diversification benefit. Diversification is about mixing investment to spread risk. Instead of putting all your money in one stock like Apple, investing in an ETF like VOO, spread your investment across 500 stocks, including Apple. This reduces your portfolio dependence on a single stock performance. Portfolio tint. However, some investors practice portfolio tilts, intentionally focus on particular sector like technology. This can be done by choosing multiple ETF with overlapping tech sector holdings. Generally though, for balanced, diversified portfolio, avoiding fund overlap is advisable. To avoid fund overlap, I use a free tool called the ETF Research Center. This tool compares and analyzes ETF for fund overlap. For example, compare VOO and VTI, you will see a 99.4% overlap in stocks, but an 80% overlap by weight, which is significant. I recommend avoiding overlap above 50% to minimize exposure to specific stocks or sectors. For instance, comparing VTI and VNQ shows a much lower overlap by weight, making them a better combination for diversification. We just covered the concept of portfolio overlap and diversification. Now, I want to introduce you to another important idea: portfolio correlation. It's one thing to diversify your investment across various stocks and market sectors, but some experts believe you should also pay attention to portfolio correlation. Correlation measures how different securities commodities like stock, bonds, and ETFs move in relation to one another. Imagine two investments then do their move together independently or in opposite direction. Correlation can be positive, both move in the same direction, negative, they move in opposite direction, or zero, they move independently. Let's make this clear with an example. Look at the correlation table for ETF with VTI, a popular Vanguard ETF. The iShare Corp S&P Total USA Stock Market ETF has a perfect positive correlation +1. With VTI, meaning if VTI goes down, ITOT will too. Including both in your portfolio does not add diversification. So which ETF should you consider? Ideally, those with less correlation. For instance, the Vanguard Real Estate ETF VNQ has a correlation of about 0.66 with VTI, which is decent. It shows that to achieve diversification, you should invest not just in multiple stocks, but across different sectors and asset classes like real estate, bonds, and precious metal. It's essential to avoid investment with perfect negative correlation because the gain is in one will cancel out losses in the other, leading to no net growth in your portfolio. Dividends. Now, let's discuss ETF dividends and the dividend reinvestment plan, DRIP. Many ETFs pay dividend, which our payment company make to shareholders. If you own an ETF like VTI, which holds thousands of stocks, you will likely receive dividend from some of those stocks. By default, those dividends go into your bookage account settlement fund where they sit idle. To prevent this, you should settle a DRIP. With DRIP, your dividend are automatically reinvest into buying more share of the ETF, enabling compound growth, which exponentially increases your wealth over time. You can find instruction for setting up DRIP by searching for your broker name along with DRIP. How much money do I need? A common question is how much money you need to start investing in ETFs. Thanks to fractional share investing, you begin as little as $1, though it's wise to invest as much as you can and add your investment regularly to benefit from compound growth. Best ETFs. Lastly, here are some top ETF recommendations across various categories: growth, dividend, bond, and real estate ETFs. This is not an exhaustive list, but a great starting point. For instance, VOO is a popular Vanguard S&P 500 ETF known for its low expensive ratio and popularity. Any ETF from this list matching your investment goal is a good choice. Now, if you want to learn how to invest in the crypto market, comment down below and I will personally create a full video guide for free. Don't click on it just yet. Make sure to subscribe if you want to grow your wealth, okay? I'll see you over there. Thank you for watching. Bye. Peace.